Good morning, traders. This is my weekend video. As we all know, it's getting summertime, so I have far less time to be participating in the markets. I have other obligations and stuff, so I'm going to give a broad stroke rundown where the markets are at and some of the things that I'm watching here. I use MarketWebs. A lot of people know that. This is version 2020. I love using this for a weekend or after hours analysis. But at any rate, some things I'm looking at here. We are starting the month, breaking above 70% of last month's inventory. This was the developing value for this month, and we're already opening above that. So, suggesting on a monthly time frame that we are breaking into price discovery mode to start our month here already on the 4th of the month. Really bullish sign for the markets. We do have an untested virgin point of control at 354.90 area. Okay. So on the downside, that is typically something that we have to keep an eye on in the future. Untested virgin point of controls don't have to be retested, but they generally do on any type of significant correction. So in your risk analysis, 350, like I said, 350 in any type of correction scenario, that is the area that you would want to be have your risk assessed. Like I said, the 355.90 area going forward. So that being said, some things that I'm looking at going forward here. I have drawn some yearly levels on my charts right here. And so basically, I'm going to zoom in right here with these trend lines. Give me 1 second here. So the red line represents 70% of this year's inventory so far. As you can see, on a yearly basis, we are above 70% of this year's inventory in price discovery mode as well. Very bullish pattern for the markets. We are running into resistance 1 on a yearly time frame, starting the first of the week. So something to definitely be aware going forward here. That could act as a major resistance going into this week. We do have to get out. If we were to get above that and we start price discovery as far as this year's inventory goes, the logical target would be up here 417.15 for SPY. The next one, I think that's where we're headed, to be honest. Everything that I'm seeing, we don't really have any liquidity issues in the market. Pretty much any type of liquidity issue that we do get, the government seems to step up and backstop that. And even the overnight lending rates for most of the developed world, banks seem to be stepping up to resolve any issues in that regard. And that's something that we've been having some issues with overnight lending rates. And even this past week, we had a little bit of major overnight lending rate issues with Turkey, and the market completely absorbed it, and it didn't even really ultimately mean anything in that regard. So, like I said, as long as they can keep plenty of liquidity in the markets, there's no reason to think that they're not going to keep the markets going higher. And we are about 2 weeks, is it 2 or 3 weeks? Well, probably 3 weeks. 3 weeks out from, no, 2 weeks out. 2 weeks out for the bank earnings. So we got major earnings only 2 weeks out. Typically, you see a earnings run up in that scenario. So going into those earnings, the upside, I'm thinking, the 417.30 area is a very distinct possibility into bank earnings next week. So I do want to point that out going into this week's session. Now, like I said, we are into R1 resistance. We do have to get through that. We might be there. That might be it, There we are in the we were off Good Friday. The futures markets were open, and as you can see, SPY is catching a bid, and having a really good day up here into R1. So, but the futures were up on Friday, so I do want to point that out. So we're probably up here as far as the futures are concerned, above R1 to be opening of the week. So definitely something to think about. A very bullish pattern. If we can stay above Friday's close and hold that as new support, that is a very good launching platform for the week, in my opinion, going forward in these markets. And as you can see right here, here's your R1 on the ES futures. Okay. And as you can see, we went right up into that Friday. We're gapping big time above R1 resistance. It's not even acting as a yearly resistance in theory. So, ideally, I'd like to see a back test of that for a continuation higher, given the relative importance of a yearly R1 resistance. So, that is my theory going first week. Probably some weakness for that back test, that gap. So definitely something to keep on watch. Okay, as I've been talking about this channel we've been in, we finally broke out of that in the last week. So every time we got to the top of this channel, we were seeing into quarter, negative 1,000 plus ticks. And as of last week, getting past the end of quarter, we are finally out of this down channel. So I can finally just delete that channel and clear up my screen and stuff. So basically, I'm going to zoom in and we'll see what's going on here. We are right above last month's 70% of last month's inventory. Not quite have broken out yet, but we are right above the 70% of last month's inventory. So I definitely want to have that one on watch. And then whenever I delve down here, I'll go down here on the 1 hour first. And basically, on a yearly basis, okay, this represents 70% high, value area high for the year on the Qs. So technically, we are starting price discovery as of after hours Friday on a yearly time frame, in my opinion. We right here at range highs, acted as resistance multiple times. So the tech higher base is technically starting to break out of 70% of the inventory so far this year. So if you do a measured move, obviously, excuse me. If you look the distance here, it's the distance from here down to probably right by here. That's almost the same distance as up here. Okay, so you're awful close. This represents developing R1 for the year. So that would be my next logical target for the Qs in an earnings run-up scenario. So I do want to point that out. So that'd be 342 area. It would be the next logical target. So we are looking about 16 points higher for our next R1 resistance on our technology. And that is still well within normalized pattern on the current channel. So that is the bullish scenario going forward here on our tech. Okay, our tech futures aren't quite as bullish going into Monday's action here. We are into 70% this year's inventory, value area high, developing value area high. So the dotted line here, that suggests that we are at value area high, 70% of this year's inventory. In theory, if we start breaking out into price discovery on our tech futures, okay, like I said, these are not confirming a breakout. We're just at value area high. Okay, so basically this is a significant resistance zone until proven otherwise on a yearly time frame, in my opinion. But if we were to start accepting prices higher, 14,108, 110 area, something like that. 14,110 area would be the next logical target. So that's about 900 points higher on the NQs if we were to start breaking out on a yearly time frame logical basis. You got to get through, of course, the shorter time frame resistance. Of course, we do have all these areas as well. So I do want to point out that as well going forward here. And do we have any inversion point of controls? Let's look here real quick. something to think about. Yeah, we do have a virgin point of control, 11 924. That would be our significant support, logical downdraft. Let's say like we put a lower high in, and then we come down. That would be our logical downside target, 11,940 area to be tested, which has not been tested yet. So, that is another theory that we have put in a significant top, and that we're just we basing sideways, lower high for a another move for a starting of a downtrend. I don't see that personally, but that is a scenario you have to be aware. So, we got our Russell. We know Russell has been on a tear this year. So, under the Biden administration and his policies, trying to promote inflation through higher yields, and that is their thesis. And you can fight what the government's plan is, or you can just go with it. And so basically, some things, some takeaways that I want to take for here going forward, because we don't have any evidence that the markets are going to accept the administration's plan, but we will see what happens. This is the primary channel that we were trading in for a very long time. So I'm under the thesis left shoulder, head, and possibly a right shoulder here in a few months. So I do want to keep that in mind. That is one of my primary theses. We do have an untested volume virgin point of control down here, 175.90 or 176 area. That would be our first net logical downside target. Then on the bullish side, everything in the market seems to be on the tear here. You could think of this as a digestive pattern for another big move higher. That is the bullish case. And if we were to start breaking to the upper side, I do want to point out this here, 70% of this year's inventory. We are still down below that. I'll check the futures real quick here in a minute. We might be above it now, but we're still within 70% of this year's inventory. So we're not in yearly price discovery as of Friday's close. So definitely something to think about going forward. We go down on our 1 hour charts here. This is our weekly webs. Okay. Obviously, we're not even back up to 70% of the inventory as of Friday close. Okay. What we saw there Friday in the global markets, they destroyed the bonds again, driving the Russell up. So we have a big gap here in the Russell. Right here is the candle where it closed at. So basically, two takeaways I got right here. One, we are at value area high. 70% of this year's inventory is at this price or lower. So basically, we are not in price discovery quite yet. And also, we are in this year's resistance 1 on a yearly time frame. So we are closing. We ended up closing the futures market Friday into R1 resistance. So basically, we're gapped up right into critical dual resistance, in my opinion, on the Russell, because the bonds basically collapsed with a lack of participation due to the holiday. So I do want to point that out. That's what a lot of this market's been happening. The futures markets have been driving price. Obviously, the trend is driving yields higher, and basically that is what the administration is trying to accomplish, to promote inflation. So they can pass their higher wage mandate. Part of the election, they wanted to have minimum wage $15 or something like that. And if they can promote inflation throughout the entire country, I mean, it's more palatable to pass that bill before the end of this 4-year term. So that's some things that I'm looking at here. And but we do have a untested virgin point of control up here at on the upside, 2331. So definitely something to think about. It's the only indice that does have an untested origin point of control on the upside. So definitely something to think about going into this week. Our diamonds or Dow Jones in stocks, value stocks have been in vogue along with the banks and this current administration. That's where money is rotating into. We saw that in the redistributions in the quarter last. So I don't think that trend is over with, especially for this earnings run up. So basically, some takeaways I got here: we are above 70% of inventory. This is the strongest indice in my opinion. Okay, so definitely something to think about. As of last month, though, we're here at value area highs. So I do want to point that out. We have been in price discovery on a yearly time frame for most of last month, but we still, as far as start of April goes, we are still here near the top of value on a monthly basis. Now, if you go over here to your YM, that might be a different story in the after our session here, the Friday session. Let me see here what's going on the price action here. And no, yeah, we're still inside of uh, March's inventory. So we're not actually in on a monthly time frame breaking out quite yet from with Friday's price action. And as far as this one goes, the untested virgin point of control, that would be 319.85 area, 86 area. So keep that one on watch going forward. That'd be the bearish side, and because we're near all-time highs, you don't have any on the upside. Some quick charts I'm looking at here. Home Depot had a very good March. I think we're going to still continue to see a earnings run up for Home Depot to channel highs here. So definitely one to look at here. I do think there's still more fuel in the fuel tank here for Home Depot. Another one of my favorites, it's Applied Materials. It's benefiting from the glut in semiconductors coming out of Taiwan. Basically, Taiwan has a water shortage and they can't produce the semiconductors. So basically, on the bullish side here, some of these stocks are doing very well in lieu of that, probably getting ahead of themselves here. But I can definitely see this week 150 on Applied Materials. Very very bullish pattern past few days. Very hot. As far as Europe goes, ASML, that's their primary semiconductor. It's just starting to break out here. Could very well see basically 680 would be your logical target for that one here in the next week or two. Probably 2 weeks here on that. If that's the case on that, you got Texas Instrument also breaking out on that glut in semiconductors. The federal government's going to give a bunch of money. U.S. government's going to give a bunch of federal dollars to backstop a lot of these companies in development of these semiconductors, rapid development of these semiconductors, to help in this glut in the automobile industry. And just like my brother, he's just been told 2 to 3 weeks layoff starting next week. And I don't think we're at the peak of the problem in the semiconductor, but we're probably getting close. But I do want to point that out. Major disruption in the automobile industry because of Taiwan Semiconductor. And then there was one other. Let's see here. Okay, we got Lamb Research. Another one going to benefit from all this stuff. Obviously, 680 logical target, another $30 on that one. If because they're going to get government dollars and everything too. So, and if you look at the longer term trend, that 680 is right in line with just the normalized trend on that one as well. And then on the downside, Taiwan Semiconductor. So I used to work in the automobile industry. So I do want to keep float this idea. I know it's going in earnings. It's getting earnings run up right now. But I know for a fact, and I don't know the particulars of their contract with all these automakers. Like you got Tesla, you got Neo, you got Volvo, you got Honda, you got General Motors, Ford, all having to stop production because of disruptions in the supply chain because Taiwan Semiconductor cannot produce the chips. Okay, and suppliers typically have a non fulfillment clause in their contracts. If they cannot fulfill the orders, they have to pay a substantial penalty to these automakers. So I am floating the idea that Taiwan Semiconductor may be a massive short based off of uh, unable to fulfill their contracts. So I'll be the first person to float that idea out there, as there might be substantial litigation facing Taiwan Semiconductor. While it may not be directly their fault, they have a contract that they have to supply these chips, and they can't do it. So I am floating that idea, knowing the auto industry, that they might be on the hook for substantial liability because of them not being able to fulfill the orders. So just something to think about. Okay, guys, if you like the video, please like it. Uh, please leave comments below the video if you guys see something in the markets that I'm not seeing. Yeah, as obviously you see me more on the bullish side than the bearish side, and rightfully so. And please retweet me on Twitter if you get a chance. We want to get as many viewers as we can. Okay, and I appreciate your time to watch my video.